All right, guys, what is going on? What is good? Volume's screwing up. Try to fix it. What up? What up? How's everyone doing? What up? Willow, Naruto, Emmanuel, Katarina, Stephanie, 2020, Sean, and Allie is here today. What's good? Yuso is also here today. Excuse me. I'm a little tired today. I gotta wake up. All right, I gotta wake up. To be honest, though, I'm glad I slept in. I think today looks awful. I don't know if it's because of the monthly close and the monthly open or what, but it does not look good today. But we'll talk about a few things, what we talked about yesterday. We'll follow up and go from there. What's good, Charlie? Trillionaire. The market is dry. Well, not Australian dollar. We'll take a look at some things. I mean, here's what I think about the indices today. I want to short the Dow, but it's our strongest index today. So, yikes. You know, what we don't want to do is go around breaking our rules. That's what we don't want to do. Right? That's not what we want to do. If we start on the Dow, okay? Hear me out here. Hear me out. Hear ye, okay? Actually, I'm not really sure what that means, but hopefully that doesn't offend anybody. It's 2023. You never know who you're going to offend anymore, but we won't get into it. If we look at the regular trading hours for the Dow, Wednesday's high was met this morning. All right, just after the open. If we stay here at yesterday's noon low and yesterday's just before the close, which we'll also talk about as well, those lows put together, I think, could be on the table for today. If we swap to electronic trading hours, this is why I have the markups on here, because now it looks a little bit different. Okay, if we just zoom in here, we have these lows here. Right here. Then we have London's lows as well, like London / pre-market lows. So with both of those down here, after taking a previous high, I think the probabilities is that it's going to trade lower. That is what I would like. But I would also want to see this gap right here too. So what I would prefer is essentially to trade higher, trade into that gap, and then rip ass to the downside. That is what I would want for today. Like, that's what I'm envisioning. Okay. The only problem with that is, like I mentioned, the S&P is down 0.3% based on TradingView, and then the Nasdaq is slightly red as well. If we look at the Nasdaq, it's actually higher. Like it's making an intraday high today. So, and it's almost coming off a mitigation model as well. So that's fucked. And then the S&P, what the fuck is this? I mean, we came up, sweep that looks like London's high, and then came down, made a new low, rallied, and then came down and made a new low, and now we're back in the middle of the range. So it's so mixed today, and it's just so, I don't know how to say it. I mean, I'm just not getting a very confident feel, you know, if that makes sense. Marked up something on Nasdaq, watched it play out perfectly, wasn't taking it. That's fine. It still counts as experience, though. What's good, Beverly? 5-minute imbalance and a 15-minute imbalance under New York Stock Exchange open. So that's what I'm anticipating. We'll put an alert at the closure of the gap if we happen to get that. But let's follow up with what we talked about yesterday. I think I think I said higher gold, right? I think I said higher gold on a long-term basis. And so, of course, gold's like, nah, screw that. And it's down 1% today, silver down 2% as well. It is trading lower. But if you remember explicitly from yesterday, I said that would be in disagreement with the dollar, right? Because I was like, yeah, we might have a higher dollar as well, and a higher dollar and a higher gold, that doesn't compute. Okay, and like that goes against each other, right? So I'm pretty sure we said bullish dollar, if I remember correctly. So we did get dollar higher. And part of that reason was, I think, these lows here on euro, and also the 90, or excuse me, the 65.95 level on Australian dollar. Look at today. Look at today. Man, was that fucking spot on or what yesterday? That's over 100 pips to the downside. Not bad. Not bad. We came right up and into that spot right there. Little 20 level too, 67.20 right there. Boom. Hit that, ripped lower. So, hey, if you were looking for Australian dollar longs and you got clapped, GG. GG. Yeah, exactly. Exactly, Trader. Now on as far as like an intraday basis, I don't even know. We ran up there in the morning because I think we were on stream around right here, 12 and 1. So we were like right in here. And it's dumped. Over 100 pips since we talked about it. But I mean, to be fair, I'm not even sure what the opportunities were. Oh shit. We did, oh fuck, that's right. We did talk about Forex Factor and that they had news. It was either for Australian or New Zealand. It was one of them. So I guess the news at 11:30, it rallied prior, and then the news sent it lower, rallies a little bit, and then it's being destroyed today. Absolutely destroyed. Any retracement, it just sends lower, retracement, sends lower, retracement, sends lower. So hopefully now, for those of you that watch this unfold between yesterday and today, now you understand why on an intraday basis, price can be like heavily one-sided. Okay? Because a lot of times when we look at intraday charts, and it doesn't matter what asset, especially gold, Jesus, gold, a lot of the times we can see whipsaw, right? It'll go down before going up, or go up before going down, or whatever. But on days like today, it's so heavy. I mean, look at it. It's every time, literally every time it just starts to trade up, it gets massacred lower every single time. Okay. So it doesn't give you an opportunity to get out of longs if you're still long from the other day, right? Because, and again, this was mentioned yesterday, because price is in a hurry to go where? Here, 65.95 and probably below that. Okay, it's in a hurry to get there. So what you should do, okay, what you should do is study this week. What happened this week so far? Well, there's Friday's close, there's Monday's open. So Monday traded up into an imbalance. Tuesday, it got sent lower. And that's either probably going to be hit today or maybe tomorrow. But if I had to say, it's probably going to be hit today. It's only like 9 pips away from that anyway. So that'll probably happen very quickly. So study that. If we're anticipating lower pricing, what does it usually do first? it goes higher. Okay. And a lot of people struggle with that. And I know that because I struggle with that too. Not so much anymore, but back then, right? If you want a long, you want a long as price is going lower. It was AU News. Okay. Thank you for the clarification. Oh, well, that makes a lot more sense than why we have had such a ridiculous move. That's nice. But yeah, so I mean, you see the euro has traded slightly lower, but not with the same emphasis. And that's news is probably a contributing factor to that. So with silver, I have no idea what any of those lines are. Probably marked up from last week at some point. This looks terrible. Yeesh. I don't know. I don't know. Plus, I think us trying to be bullish yesterday here was probably not the greatest idea. In hindsight, of course, I can't go back and change what I said yesterday. But looking at it now, it's like that makes sense. So hopefully with yesterday, you understand, number one, I wouldn't say intermarket analysis, but I would say more so looking at different assets, right? Gold, dollar, currencies, stuff like that. And number two, reiteration of why I think only looking at one chart is idiotic. And I don't know why this shit is all over Twitter. One time frame, one asset for 1 month or 90 days or whatever. I'm like, that is the dumbest fucking thing I've ever heard. Dumbest thing I've ever heard. No top-down analysis, no intermarket. You're going to get your ass handed to you. Like, bro. Come on, man. But, you know, Twitter is going to be Twitter, okay? If there's one thing I know about the internet, is that the internet is going to do internet things. And I can't stop it. Can't learn anything like that. No. No. Y'all ever seen, I think it was The Godfather? And he was like, look how they massacred my boy. That's how I feel about the S&P right now. Shame. Shame. This just looks totally bad. Swept a high, swept a low, swept a low again. Dude. All right. With that being said, let's follow what we talked about yesterday. Yesterday, okay, we actually created equal highs after the session, which was bonkers to me. But what I did give you was the 4610 level. And I said, all right, yeah, that's probably going to be where trailing stops are from anyone who was short. The issue is it swept these lows, came up, rallied, came up again, and it's like, oh, okay, that's going to be the run. It's like, nope. Equal highs, U-turn, we'll run stops one more time, and then fuck all and go to the upside. Like, bro, sassy is what that was. Pure sassy right here. Ran stops. I think, well, some trailing stops in here at the open, but It had lows here and here, swept, and then swept a second time. Now look at, here's the crazy part, okay? Here's the part that really threw me off. Are you ready for this? This is 245, bro. This is 245 right here. Bam. There's 15 minutes left in the day. That's only 3 5-minute candles. All right. And I'm like, oh, well, I still think 4610, maybe that'll be for tomorrow. We'll see. We'll see. But maybe I'm thinking that's going to be for Tuesday. Rips up. Last candle rips into the close. I mean, that's like a 12 or that's like a 10 or 11 point candle just in the last 5 minutes. I'm like, dude, because y'all already know, we're pretty good here with direction, okay? But a lot of the times it comes down to the timing that I typically struggle more with, okay? And so that, to me, I wasn't surprised that we got 4610. I was more so surprised that we got it in the last 10 minutes. That I could have not anticipated. I would have not anticipated that at all. At all. But then a little bit in the after hours, I looked at it and I went, well, what really took place here? And how do you know this is a stop run? Because you do the same thing with relative strength analysis. Okay. If you got some value so far, drop a like on it. We got to fix that ratio. Our ratio is fucked up. We got to fix it. Rest of the week. Yeah. Well, now that I think about it, I guess because it was the close of the month, maybe that makes sense. I guess that probably makes sense. But again, I just wasn't expecting that in the last 10 minutes. I mean, I would typically expect volatility in the last hour, but narrowing it down to the last 10 minutes, I wouldn't have guessed that. Like at all. That was my point. Anyway, what I was saying is if you look at Dow, okay, that 12 o'clock low here to 245, okay, that 12 o'clock low was swept on the S&P. On the Dow, it was not. So when S&P took that low and the Dow did not, that was, to me, and again, this was hindsight. This was like afterward, 10, 20 minutes later. I was doing shit yesterday. It was afterward. I'm like, okay, well, what did I miss? Like, what happened here? And that's what I saw. I was like, oh shit, like Dow didn't take the 12 low, S&P did. That's a stop run. And then I went, okay, well, what was the trade though from that? And I'm looking at a 1 minute, and honestly, there really wasn't one outside of maybe that imbalance. But I will tell you this. When it comes to entering the market, okay, if I'm going to enter a trade, especially with indices and especially E-mini, Jesus, E-mini, then one of the first things I'm looking for outside of what my target is and what my stop is, one of the things I check for is the time. What's good, Leon? Okay. Number one, it has to be a good time of the day and of the week. Okay. Number two is the week. And number three, there has to be enough time between when I'm entering and either the rest of the session or the rest of the day, maybe, or, whatever the case. So the thing is, I would look at this, right? Again, what I'm telling you is about right here at the 254 mark. I can tell you that for me personally, I would be very hesitant to enter that, because now you're saying, okay, You're entering at 254. And the stock exchange closes at 3. So you're only going to be able to hold that trade for a few minutes. And now, obviously, you can look at this and go, well, yeah, John, I mean, it would have been a wick entry and it would have went straight to profit and you would have been blessed. Well, yeah, in hindsight, we can look at that, of course. But typically, every day, on an everyday basis, am I going to enter with 5 minutes left or 10 minutes left? No. It might be a good time, okay, because it's inside that last hour, but the time constraint between us entering and only having a few minutes, to me, yes, you would have won that trade. It would have been great, all that. But my thing is that trade worth the risk? Is the risk, like, is that trade worth the risk? And my opinion is no. I don't think that would have been worth the amount of risk here. Because imagine this for a second. How would you feel, okay, if you entered at this imbalance at 4604, but then it comes down to 4601 at the close for that gap, and you know you're down 3.5 points. That's $150, $175, and then you take a loss just before the close, and you got clapped in the last 10 minutes of the day. You know, is that really what you want to do? You know, because that's always a possibility. And like that, I would feel like an idiot if that would have been a loss, because I'd have been like, well, damn, why did I enter with only 6 minutes left? And I would have just looked at that like a bonehead mistake. So if we weigh the pros and cons of entering at a time like that, I want to make this clear to you. In hindsight, it would have been a very nice trade, but in the majority of occasions, this was not worth the risk, in my opinion. And sometimes I think it's better to miss out than it is to try and, you know, squeeze something out. So that's my opinion. Okay. That is my opinion on that. I'm trying to figure out what the Nasdaq wants to reach for. I don't know. I guess maybe this gap from yesterday, at least in the regular trading hours, because the electronic hours, I don't know. And look at this 1 hour time frame here. Look at this. This looks, I don't know, it looks janky. The S&P looks janky as fuck. I'm not even sure what janky means, but it's gotta mean not what we want. That's what I'm thinking. That's what I'm thinking. Buy stops, gap, imbalance, liquidity run. So for today, we have an alert at Monday's low. I have an alert there. And, well, obviously we have an alert at the gap. But what I would study for today, like if you want to do like a before and after, this is what I would study here. Is this short-term high? And then this short-term high right there. So what I would anticipate for today, I said this already, but I just want to make it more official, I guess. If I can. Bro, what happened to the arrow? Is there, all right, never mind. I don't understand where that's at over here, but whatever. Oh, it's right there. All right, never mind. We're going to move past what you just saw, okay? We're going to act like that didn't happen. What I'm thinking is these two short-term highs, okay? We rally above that to get buyers in, trade in the gap, probably even trade a little bit above that, and then rip lower. Okay, again, this is what I'm anticipating. Okay, that's what I think is going to happen. What I mean, if there's any reason to not trade it, the only one reason I can think of is because it's our leader today. But those are high probability targets. I think the risk is worth the reward. So that's what I would do is on your chart, I would screenshot this. London's low, Monday's low. I had this marked up earlier, but I marked it up on the other chart colors. Because I want to say this was also last week's high in the open market. So it was ETH. No. It's RTH PWH. Regular trading hours, previous week's high. That's what that means. And that is a mouthful to write out into the chart, and that's not what I'm going to do. So something like this. Okay? You guys good with that? Was good, Andreas? Before the session was doing that? Oh, okay, yeah. So, I mean, I think you could definitely do something like that. But first day of the month, I don't know. You got to be careful. And NFP week, you got to be careful. So we'll see. What I would not want to see it trade above like I wouldn't want to see it trade into the 770s. Because if we basically mark up this whole thing like an imbalance, the 15-minute is very hard to see. I mean, it's like it's very small because there's an imbalance and that gap is like right there. But on the 5-minute, there's a much more pronounced imbalance here. So, I mean, if we measure from that candle's low to the gap like that, this is why I wouldn't want to see it trade into the 70s, like up here. I wouldn't want it to trade into that. I would want it to respect this 5-minute imbalance here. Okay? Does that make sense? And that, I think, is probably the only thing I'm looking for today, other than Australian dollar going lower. It's amazing to see that what we learn here is making sense when we look into the charts. Right. You know, that's why I made that Smart Money Fundamentals video. You know, markets move from liquidity to liquidity, imbalance to imbalance, liquidity to imbalance. My favorite, imbalance to liquidity. Okay? Because you already know there's basically those four combinations. I mean, it definitely gets more complex than that, but in a general sense, like a fundamental sense, if you're trying to keep it simple, then yeah, that's essentially what it does. So if we have already taken liquidity, I mean, it doesn't look like a lot, to be honest, but you know, if that is a liquidity run, then the open liquidity is going to be on the downside now, especially since we have two. We have one set of lows here and then another set of lows here. So it's like the double whammy. But if I'm wrong and we trade higher, then hey, you take a loss and that's it. You go, okay, well, it was a nice setup, but we lost. Good thing we managed risk, you know? And that's it. Then you live to trade another day. But I will tell you this, it is hard to manage risk with E-mini though. I will tell you that. Oh shit, I will tell you that. Because, yeah. I mean, if you just go and do some math, you'll know. I mean, it's probably at least a couple $100 just on that. So, which, I mean, isn't a lot to some people, but some people, I mean, this trade alone here would be worth more than their whole account. You know what I mean? So it's all relative. But yeah, index futures, you can do really well, but you can really get demolished. Demolished. In 2020, I wouldn't look at that. If you're asking about this, it's too far out. You know what I mean? So if that is what you're asking about here, this down count over here, I wouldn't consider that. But if you want to, I guess you could consider that confluence. Well, Elmer, I don't really use fair value gaps. To be honest, I really don't even know what the difference is between that and an imbalance. I simply just stick with imbalance. Okay. But to answer your question more specifically, that's why I'm saying I wouldn't want price to trade into the 70s, because we could allow it to trade, you know, into this imbalance. It can trade past the gap. Yeah, that's fine. But what we don't want to see is like closures in the 70s or like the high or like low 60s, mid 70s. We wouldn't want to see closures there. We would want to see the bodies respecting it. Yes. As a matter of fact, let me just take a screenshot real quick before we continue. And then I got all my shit on it, the press join button and that other shit on it. That's fine. It's cool. But I do want to be able to follow up tonight, later on this evening, to see what actually takes place today. About 100 pips on US oil today. Very nice. I haven't looked at oil in a while either. Oh, it's the same thing, but yeah. Well, that's one thing about trading Twitter as well, is the overcomplication of things. I don't like that. Like all these fancy names and shit like that. I don't really care for that. I don't think anything that I have or that I talk about is entirely complicated. It's really just straightforward. The mitigation model. What is that? It's a model based on mitigation. Hello. Nothing overcomplicated about that. You know what I mean? It's called a mitigation because it's, you know, I'm not going to get into it, but the reasoning, you know, if you're on the wrong side of the market, you have a chance to mitigate your position before the market reverses. Hence mitigation. You know, like I think having, what is it, FVG, right? Fair value gap when you could say imbalance. You know, who was it? Kevin from The Office who said, why use lot words when few words do trick, or some shit like that. You know, he's just being stupid. But it's just, it's the idea though. Why would you need 3 names for something that could only be done with 1 name? Or, you know, maybe some people know some shit that I don't. I don't know. But when it comes to education, one thing that people like is simplification. That's one thing I've noticed. I mean, me too. I like simplification. Don't come at me with some big ass names and this, that, and the third, all that. For what? That's just ridiculous. Ridiculous. Still not getting lower oil crazy? Yeah, well, like I said, I haven't looked at oil in a long time. I have no idea what's going on over there. I mean, I looked at Halliburton stock and I think it's up. Oh, shit. No wonder. No wonder Halliburton is up, because oil is up. So what do I have marked here? 61.87. I guess that was these lows. I guess we never came down for. Well, you can see how long it's been since I've looked at it, because I still have a markup here, even though it's not even close. And it's obvious that I looked at this like a stop run. Yeah, I don't know. The last time I talked about oil was back in here. We were looking at Halliburton stock back then. That was a fun time. But I didn't hold that entire move. We did really well though. But after that, haven't done anything with it. Because I don't really pay attention to OPEC and all that bullshit that they do and all. I don't deal with any of that. Like I don't look at that. I don't care. Gas for me anyway is a tax write-off, so it doesn't really matter what the price or what the cost of gas is. I mean, it's going to be a write-off either way. You know? Oh, you've been wanting lower oil for months. Well, shit, dude. If you've been wanting lower oil this entire time, man, oh shit, that's not good. That's not good. Don't fight it. Don't fight it. That monthly chart though. Ew. That looks pretty awful. Yeah. I'm glad I don't watch that shit. Natural gas, you know, to be fair, bro, I never want to look at natural gas again. I never want to. And this is why. It's not the natural gas from the Oanda chart like I have here. The futures chart though, bro. If you want some homework, I'm gonna fucking cry if I do this. If you look at the value of 1, not 2 or 3, 1, not option, futures contract on natural gas from here, lower, okay, you will shit yourself. Because it's not no 5 grand, 10 grand, 50 grand. It's fucking above that. It's over. I'm pretty sure if I remember correctly from, this was a long time, it's like a year ago. This was, I think, over or just close to $100,000 a contract. That's why I'm gonna cry. Because I literally watched it happen. I'm like, oh, there's a fucking imbalance right there. And I wanted to short that, but I was like, nah, I'm just not gonna do it. I'm gonna let it go. And then I watched it. Look at this. Look how consecutive that is. 1, 2, 3, 4, 5, 6, 7. 7 down weeks, bruh. Aiming for this low, and I don't know what else. And yeah. Natural gas. Big shame. But to be fair, options contracts can do really well as well, but its futures are just ridiculous. Like beyond anything else. That's why I hardly ever look at them, because all I feel is regret and sadness. So we're going to leave it alone and never mention it again. Never mention it again. The lows look clean. Yeah, they do. But market didn't go for it. You know? Plus, to be fair, the metals market, like the commodities market, is really the only market that has actual supply and demand factors to it. Currencies, no. You guys already know it's controlled by an algorithm. Money can print at any time. They can print it physically, electronically. It's fucked. With gold and silver, there is a actual supply and demand factor that goes into that. I've explained that time and time again. Matter of fact, a lot of people learn a certain idea from me and then went and taught it elsewhere, like they, you know, had it or whatever. But that whole like Christmas, Valentine's idea, you know, end of the year, New Year shit, all that, like that is real supply and demand. Oil as well, same thing. When oil contracts went negative and all the lockdowns happened. So when all the lockdowns happened, nobody was driving anywhere. So since nobody was using as much gas on a global scale, they had kept the same production, right? So that's why that influx of oil, the amount of oil, hit the market. And so, yeah, the price, I mean, you saw it, the chart back in 2020, it took a nosedive for that reason, because that's real supply and demand factors. And that's why we were looking to buy Halliburton, because it was a $4 stock and it should be in the 30s and 40s. Yeah, I bought it like 8, and I think I bought it again at like 6. I didn't get 4. I don't know, bitched out. But we got in at like 8 and I think 6 and some change. And then it ran to like 12 and then beyond. And that was nice. I honestly, I should have put the farm on that, but I didn't. That was a once in a lifetime opportunity, and I don't think that's ever going to happen again. But point is, that is like real supply and demand factors, not like currencies on a 5-minute time frame or indices on a 5-minute time frame. Supply and demand doesn't exist in that sort of realm. It doesn't make sense. Like, because you already know we can be very pinpoint accurate with where the market's going to go and what it's going to do. And that has no, like, supply and demand has nothing to do with it. It's more so algorithmic and liquidity based. So there's that. And another thing too, like with those markets, with those commodities markets, I don't think I'm ever gonna like call any trades bigger than what we did with orange juice, oil, and then even the metals. Like other markets just don't move like that. They just don't. So maybe the crypto market can, but you're not gonna see commodities go to zero the same way that crypto does. So I'll let you decide what what you want to trade, but I'll never call a trade on Dow that is bigger than orange juice, coffee, or oil or gold. It's just not going to happen. Like fundamentally, I just don't think it can. Probably why oil has traded how it has now. Well, I mean, and that's the thing. I don't know. That's why I said I don't keep up with economics, global economics, politics, especially, and then OPEC. I don't keep up with OPEC, what they do or what, increasing production, stopping production, what like I don't keep up with any of that. I just simply don't trade the oil market at all. So I leave it all alone. Trade of the year on gold, you sharing? Yeah, probably. Probably. I think some of you would shit yourself if you went back and looked at some of the setups that we looked at. I mean, we could do that, but then John's on his bragging ego shit again, and people don't want to see that type of stuff, so we'll just leave it alone. But yeah, go look at coffee, orange juice, oil, and all the things that I've taught you, and you're gonna see like, oh yeah. What's good, Electric? Sultan, we haven't done anything yet. What we are anticipating is a run into the 730s, maybe even 740s, and then I would like to see lower. Excuse me. I'd like to see 35. I guess 35.50s maybe. Like 35 550s. Forget the Dow has all these numbers on it. That is what I'm anticipating. Andreas remembers. I mean, I think some of you would probably remember if you have seen those streams from many, many years ago, you would know like, oh yeah. Because I'm pretty sure coffee's probably still running. I haven't looked at coffee in forever. I don't even think I have it on my list, to be fair. Commodity grains. I don't even know what the symbol is. Oats, rice, soybeans, wheat. Oh, the wheat short. Oh, I remember that. That was the only short. That was the biggest short I've ever called ever in the history of life in the commodities market. I remember this. I specifically said wheat is at all-time highs. And I shorted with an options contract right there. Right fucking there. Okay? You look at that weekly and that daily. Look at that. Limit up, limit up. I think that might have been a limit down. I don't know what happened there. Limit up, limit up, limit up, limit up, limit up. And then right up in there, boom. I shorted with an options contract on a wheat ETF. We dropped. I did get a little shaky in here. But again, the ETF was a little bit different. What do you think I was aiming for? It's in my tweets somewhere as well, just so you know. What do you think I was aiming for right there? Equal lows, right? The market moves from what to what? Imbalance to imbalance. Liquidity to liquidity, right? What do you think is going to happen on this wheat chart? Hello. It got close in August and then didn't hit that until December. Look how long that took. It took a long time. But yeah. They all do the same shit. And that was all-time highs. That's why, like in the wheat market, I will probably never call a bigger trade than that ever again. Because think about it. How many times are we going to get to all-time highs? The last high was in February of 2008. This was in 2022. And fuck. This goes all the way back to 1970. I mean, how many times is something like this going to happen in in life itself? Almost never. So yeah, I don't think number one, I don't think anybody's going to call a bigger trade than that. But at the same time, I don't even think I will be able to top that either. At least for the short side. So the fucked up part though is the wheat short that we took was it didn't gain as much as I thought it would, and that really pissed me off. But that's okay. That's all right. And the last one I think was coffee, but that was years ago. I don't even know if I still have it marked up. Nope. But it was right here. It was this down candle I pointed out. It is on my YouTube though. All right, because you know, I'm not gonna let that fucking go. Right? Because I think it was in here. I was like, oh yeah, we're back into this down candle and I'm expecting higher pricing. Now watch this. Okay? I told you we weren't going to get into this because of an ego thing, and then here I am doing it. 91.64 as a bad entry, okay? Look at that weekly time frame. Look at that right there. Are you fucking kidding me? Are you kidding me? Look at that. From 90s. Now I definitely did not expect 200s. I'll be honest. But that right there. Look at that. That bitch ran for 2 years. 2 years it ran for. I don't trade like that, just so you know. But that, I believe that was on not a session that I had, but that was I was a guest on a different session. So I didn't think this would happen. I forgot what it was. I think there was like droughts or something near the equator or whatever for coffee beans and shit. But yeah. And I'll never replicate that again. Won't happen. And that's why now I just stick to intraday trading, because there's no way I'm going to be able to outdo some of the things we've already done. Just can't do it. It just won't be done, bro. It's kind of like if your team went to the finals and then, you hit a game-winning shot and you won the finals. You're not going to be able to ever do that again. Because now next year you're going to have a different team and probably won't make it to the finals, and you know what I mean? Like, it's just a once in a lifetime thing. And I'm not going to chase that. I can tell you, if I tried to chase those things, I would go crazy. Because there's just no way. Best to just leave it alone and not do it. Lost more than 15K because of Luna. There was I posted a case study on Luna, and there was clear signs of distribution before it sold off on the daily and weekly time frame. Now, I didn't monitor Luna prior to that. It was all obviously hindsight. But if you go look at a Luna chart on the daily or weekly time frame, you could tell, like, it distributed above an old high, it broke structure, it hit an imbalance, and then base ripped. So somebody knew what they were doing. Expected liquidity and rebalancing is moving the market. It is a huge company is moving money or something. What is your opinion? Well, so there are entities that can move price, yes, but number one, no one can control the market for that long. Okay, on an intraday basis, I focus on like algorithmic ideas and liquidity. Okay. Now, on a little bit of a larger time frame, like what we did with JP Morgan, if you've been following along, we'll look at that briefly. I was trying to watch the Dow here because it looks like it's coming close to the gap that we've been talking about. But like with JP Morgan, for example, and well, there's the gap, so we'll look at it in here in just a minute. But back in here, I talked about this being accumulation because we're below an old low. We had some other stuff on the monthly here, and then we gapped up and we came back into this. That's why I longed there. And the only target I had was 145. It wasn't until later I introduced an idea of it trading into the 60s. And obviously from that accumulation at the 126s, we have rallied very, very aggressively. So to me, yeah, smart money can be accumulating here. And well, you see that it's being marked up now. So my opinion is that there's going to be probably some distribution in the 60s, and or maybe it runs to all-time highs. I don't know. But like this, to me, yeah, that is smart money accumulating because it's a much larger time frame. Okay. JP Morgan, they're the largest bank, I think, in the world. And I think they can buy back stocks. I think we have that in the US. I think companies are allowed to buy back shares. So they probably do that. And it's not just them either, but it's other like hedge funds and insurance companies and stuff like that can be accumulating as well. And that's, to me, like if you look at it, that's why price doesn't go lower. It's staying stagnant here. But look where it's staying stagnant at, an old low. Okay. So smart money does what? Buys below old lows. And that's why it consolidates. It's not going higher. It's not going low. One day it did go lower, but in a general sense, it doesn't go any lower after a run lower. Why? Because it's being bought. They're buying and buying and buying and buying and buying and buying and buying. Okay. So yeah, that's different. But like a 5-minute time frame, to me, entirely algorithmic. Okay. So we hit the 40, I think. So like this right here, I think could be an okay short. So just to follow up with the screenshot we took earlier, I would also screenshot this right here. Okay. But like I said, what I wouldn't want us to see, like my stop wouldn't be at this high. Okay. I wouldn't risk all that much. My risk would probably be in the 70s or even like the 80 right here. I would probably go with the height of this candle. Again, if it were me, I'm not telling you to trade this. This is not financial advice at all. Okay. But my stop would probably be at the height of that candle. Like right there. Or sorry, not that, the red one. I mean, because in order to frame a 1 to 3, like if it was from the gap at least, in order to target the lows, or like even the second one, we would need a 1 to 3. And so the stop being up here, I think would be a little bit too loose. See, it's only a 1 to 2. If we dragged it lower, that is a 1 to 3 right there. You see what I'm saying? So that to me is worth it. Because now your stop is, it would have to get above this up candle. And if it gets above that up candle, it might as well go for that high. See what I'm saying? So that's just my idea. That's what I think is likely to happen. But I could be wrong. That was also our strongest index today. So that to me also plays a factor. And the only way we're going to find out is to let the candles print. It's very hard to confirm the Dow with the other indices because they don't have the same targets. They don't have the same ideas going lower. The S&P doesn't. Shit, if anything, the Nasdaq is higher. So it's really hard to say. Okay. But that's what I think is going to happen. Give me 2 seconds. I'll be back in a minute. Quick 5-minute break. All right. Are we back? Are we back? Oh, how do we get rid of oh, there we go. There we go. Oh, you still have the marking for your for the coffee? Yeah. I'm telling you, man, it ain't gonna happen again. That was a one and done, man. One and done. Yeah, drop in the Discord. Go ahead. Go ahead. Ugh. What I'm looking at is number one is the closer this 15-minute candle. It doesn't look entirely all that great as of yet. Because I think if it closes above that imbalance we've outlined here, probably wrong on the idea. 750 could be a quarter level, but I don't know. Guess we'll have to see. What do I think of gold? To be fair, I think bullish on gold yesterday, and it took a dump today. So don't know. Do not know, man. I'd probably leave it alone. It's I don't know. It's the first day of the month. I mean, it is a Tuesday, but I don't think today is a prime trading day, if that makes sense. Like I think a lot of people on Twitter are frustrated right now, and I'm not surprised. I mean, I think I'd probably be frustrated too if I was doing anything today or if I did anything yesterday. It's rough, man. It's rough. The timing was just weird yesterday. It's a brand new month. The indices are heavily mixed. They're not confirming each other. I think it would be wise to not just save your capital, trading capital, but your mental capital as well. Okay. Like if I shorted that gap, I'd be a little bit nervous right now because I'd be like, oh shit. It went straight against us. It's right at the high end of the imbalance. You know, this 15-minute candle's fixing to close. And I don't know. So I'd probably be a little nervous here if I was short. Okay. But again, we'll watch it. I want to give it a little bit more time. I mean, I had planned to be off by 1 o'clock, but we'll give it a little bit more time. It's cool. Are any of you very knowledgeable about Twitter? Or X now, rather? Meaning, like, so I have a question about impressions. Like, if impressions are calculated not just based on your tweets, but if it counts, if you comment or reply to another tweet, like, do those impressions count for your analytics? That is my question. We are at the low 60s, and that is not what I would want to see if I was short. It's not what I would want to see. See, now it's trading above this imbalance here, which means that's probably wrong. So if you think about this, like let's say we decided to get in at the gap for whatever reason. If our stop was say at the high up here, okay, which again to me I think is a little bit too loose, but let's just say that it was. If we have this imbalance here as sort of like a last defense, if it's being disrespected and now price is roughly halfway to a stop, this is a case where I would say, you know what? It's not respecting the 15-minute up candle. It's not respecting the 5-minute imbalance at all. So why not just close, take the loss, and move on versus waiting for an entire stop to be hit? That's what I would think. Okay. Because it came right, that red line we hear, remember, that was the high end of this up candle here. So if price was going to be bearish, it wouldn't trade up to this, in my opinion. So if I'm wrong on that idea, I don't want to hold it as it's gunning for my fucking stop loss. You know what I mean? I would say, shit, I'm wrong. I'll just hop out instead of taking the full loss. So, yeah, because that 15-minute candle, or the 15-minute time frame, the candles, yeah, it's not looking too advantageous for shorts. An hour and 40 minutes left in the day as well. The Nasdaq making a new intraday high as well. So if the other indices, right, and this is why when I'm in a trade with whatever asset it is, if it has a correlation, I'm looking at what the others are doing. Because if we wanted to be short on Dow, again, I think the setup is great. It has more reward than it does risk. If this is a stop run, it shouldn't trade above that, right? But before price got in here, okay, what did we talk about? The other indices that are not confirming the same idea. I don't know what the S&P is going to do. It's already ran liquidity more than once on the downside, and it has ran a previous high on the upside. So it could trade above this high. But in other words, what I'm saying is that it's not confirming that it wants to go lower. I can't justify that. The Nasdaq is trading higher. Okay, it's making a new intraday high, and the other, like the S&P, isn't. So is there anything bearish about Nasdaq? Not entirely. It's the Dow is the only one that has actually like actual high probability targets, but that's only one index of 3. And it's fine. I'm going to find out this week to see if I can get more impressions. So, dude, Twitter made it difficult to be monetized because I think you have to have at least 500 followers, easy. I think a certain number of tweets or whatever, and then they made it where you have to have 15 million impressions in the last 90 days. And I'm like, huh. I'm like, oh, okay, I thought I got a lot of impressions. I'm looking at like 50K months, 100K months. And then I'm like, wait. 15 million in 3 months? That's like 5 million impressions a month. Here I am thinking 100K was a lot. And they're asking for 5 million. So I'm like, damn, I need to get my impressions up. Do I look at the dollar when I look at the indices? Sometimes yes, sometimes no. We were bearish, or excuse me, we were bullish on the dollar yesterday, like in a general sense. With the dollar going higher, it would make sense for the indices to go lower. But it doesn't look like they're doing that. Right? Bullish dollar here, or like even like a 1 hour. Let me see. We've been rallying on the dollar, but we've been rallying on the indices as well. And that's why, to me, it's hard for me to do that correlation because they fall in and out of correlation so much. The only time I have found where the indices have really, really exponential moves is when they have relative strength that confirm, you know, bullish or bearish. They have a high probability target and the dollar confirms. Like if you have that, my friend, you have a very, very good setup, or at least a high probability setup. So you can feel free to write that one down. And that's one thing you get here being on the live sessions. Every once in a while, we'll sneak in some ideas here and there. But yeah. So if we were, let's say we were bearish on the indices today. In order for this setup here to be like an absolute banger, the other two indices would need to confirm, which they don't. And then the dollar would need to want to go higher exponentially, right? And when you get that, when the stars align like that, my friend, oh yeah, that's when it does shit like yesterday, when it just zooms in your anticipated direction. Yeah, see, I don't like how we closed above that. But in a general sense, though, we'll see what it does. Be mindful of this gap here too. Right here. This gap. I mean, I know it does gap a lot, but that is seen on a 1 hour as well as a 15-minute as well. You need a big time influencer? Well, I'll get 20, 30,000 impressions if I get some of the Twitter traders that comment, because they have pretty big followings, 20K, 30K. I mean, which is cool. All they do is just post fucking bullshit. Not bullshit, but some of them post education or whatever. I'm not big on Twitter because I neglected Twitter for a long time. Twitter in 2016 and 2017 was the most toxic thing ever. I mean, it was bad. It was so bad. That's part of the reason I was toxic when I grew up as a trader as well. It was just the environment. Sometimes we're a product of our environment, okay? And I hated being like that. So I tried to get away from Twitter. I was like, I'm done. I don't want to be a part of it. I don't want it. So that's why I only have like 2,000 followers, and I just got back on Twitter like maybe a year or two ago. And that's why I neglected it for so long. And that's why I ran up my Instagram instead. You almost never, the last few years, you almost never saw me promote my Twitter. Almost never. Because I didn't want to. I was like, nah, Instagram. And tweets being viewed on the Twitter platform in an organic context. If one user sees the same tweet 3 times, that tweet will have 3 impressions despite them all being from the same person. Oh, okay. That makes sense. Oh, shit. Look at that wick there. Huh. That's interesting. Matter of fact, I want to give this a few more candles. I want to give this a few more candles. So I'll tell you this. If we are bearish, what we want to see, if it does, the gap I just told you about, we would want to see it trade below that. Like push through that, essentially. We wouldn't want to see this act like a buying opportunity. We want to see that get wrecked. Again, but price has to be bearish though in order to do that. And you can't even see it because TradingView flattens it out. So that's nice. But yeah, we'll give it a few more candles, okay? But yeah, so what I looked up like one video on how to get more impressions just to see like what people say. And I think what got me a lot of impressions yesterday was commenting on people that have really big followings. Like one dude had, you know, a couple 100,000 impressions, and then I made a comment, and then I got like 5,000 impressions within like a couple of hours. I look at my tweets and I'm going 800 here, 1,000 here, 400 here. I'm like, damn, I get way more impressions by commenting on bigger pages than I do, say, I posted a thread about an hour ago, 7 books to read again and again. And that'll do okay, I'm sure, but nothing beats, right now at least, nothing beats commenting on bigger pages. Let me see if I can find it. While we watch the indices. And again, I'm just trying to monitor all 3 on one screen, unfortunately. It might be in the tweets and replies. Yeah. Okay. So, all right, this is kind of embarrassing, but if you go to my tweets and replies on Twitter, there was a guy named Lance, and it's a video of some girl on a roller coaster, and I commented quality risk management here. That was 18 hours ago. Okay. Now let me put this into perspective for you. On a good month, let me tell you. So in June, by myself, 62,000 impressions. May, 120,000. April, 190K. March, 53K. Okay. So I average anywhere from 50 to 100K, right? I commented 18 hours ago, quality risk management here. I got 28,000 impressions. 28.8 thousand impressions. Now, the original post from Lance got 12.8 million impressions in 18 hours. That's fucking crazy, dude. That's an instant cheat code right there, because 28,000 is like a month by myself, and I did that less than a day by just being in front of someone else. So maybe Twitter does that on purpose. Like maybe they want you to interact, I guess. I don't know. Social media is weird because it's different for Twitter. And well, obviously Twitter, but it's different for YouTube as well. Like YouTube Shorts and stuff like that. I think I post a good one, no views, and then I'll post like a regular, an okay one, and it'll get a couple thousand. I'm like, what the fuck, man? But I mean, everyone's got different algorithms, so I guess it's just figuring out which one does what. But shit. Let me do some math real quick. $15 million impressions at, let's just say 28 days in a month. You would need, oh no, wait. No, we need 5. I'm tripping. 15 million impressions at 90 days. There we go. So that means you would need about 170,000 impressions a day. So if I had 30, almost 30 from one comment, I would need to comment on like 10 big pages every day. Charlie, what are you talking about? You're gonna see a lot of people coming to your page. What do you mean? I need some context here, bro. Complete sentences. I did have a lot of people come to my page when I was talking with the MMX trader and I think a few others. That was easy, 20, 30,000 impressions in a day too. Oh, to get people's attention. Yeah, okay, that makes sense. Well, and that's the thing. If you look at what's viral on the internet, a lot of it is so stupid. Like that girl on the roller coaster. Yeah, it's just dumb shit like that. Just dumb shit. Just mind-numbing garbage. But it's cool. All right, I tell you what, we'll give it to this candle's closure, and then we'll hop off for today. But the last hour, I think, is going to be interesting. I don't think we're going to run all the way down here that last hour, but we will see where we are at the end of the day, though. And I would tell you this. I would keep these also on your charts, because this may be important for later. The market can always leave these open, but if they're not met today, that's possibly going to be good for a later date. Okay. Try to stage a fight at the back so they can get more attention. Yeah. Well, that's why I don't really care for Jake Paul. Well, one of the reasons I don't care for him, because that's all they do is marketing stunts. Everything they do is just marketing stunts. Like it's just so fake, and I'm like, that's stupid. I mean, granted, he's really, really rich, okay, but for me to watch somebody like that, I just don't. I'd rather go read a book or watch a movie or like do something productive. A lot of celebrities I don't care about. I don't care. Or like that's why I can't watch that type of content because it's just fake and I know it's fake. It's entirely staged. Anyways, you guys got any last minute questions before we shut it down for today? Any last minute things? The 5 minute is interesting. Hmm. I think today entirely is just interesting across all of it. Look how mixed we are today. We're gonna take this off now too. I'm interested to see if that holds. Maybe I don't know. I'm not trying to do too much here. I need to go have lunch too. Haven't had breakfast or lunch today. And then the market review will be out later. Go over some things. Matter of fact, I need to write this down before I forget. Outside of that, I don't think I have any more or any announcements for you guys today. See you later, Andres. Was good, Alex? How did I start trading? This is a good question. I was introduced to the stock market from my dad, actually, because he worked for Halliburton for a long time. And every once in a while, he talked about stock, like, oh, I'm going to sell stock today or whatever. And I'm like, what the fuck is that? So that's when he was saying, oh, it's like a piece of a company or whatever. I get stock for working for the company. I'm like, Dad, I'm like 12 years old. I don't know what that means. So it was not until later when I joined the military I signed up in 2013, but I actually didn't enter until 2014. So I bought after I got out of boot camp, I went to what's called an A school, and which I got kicked out of. But while I was there, I bought a laptop in order to learn Photoshop. And what I also did was, Google what is the stock market, stuff like that. That's when I was watching YouTube and Googling stuff and all that. And I ended up buying some stock too. I bought a penny stock for, I think it was 41 cents or something like that. And a few months later, it went to over $1. And I almost tripled my money. I'm like, oh shit. Like, this is great. I put half my account into that stock too. So by almost tripling my initial, trade at half my account, I did really, really well. Now after that, I lost my ass because I didn't know what I was doing. And me wanting to figure it out, that's how I got into other things like the Forex market and options and stuff like that. Because I, like many people, I thought it was just you buy stock and sell stock, and that's it. But no, I didn't know there was things like leverage and margin and futures and currencies and metals and options and all that. I'm like, damn, this really, runs deep in everything that you can do. And I just wanted to learn, what I was doing. I was like, I need to figure this out. So just kept studying. Man, I had all the time in the world on my hands because I was in the Navy. So I was like, I got time and I'm interested. So I just kept studying and growing, and that was that. No, I don't watch the CFDs. The CFDs don't influence the futures. The futures influence the CFDs. Well, that and your broker too. Yeah, who's margin and why is she calling? Yeah. That was one of the first live streams we did on his channel too. My grandparents introduced me. Took my first trade on their Scott. I had a Scott Trade account too. That was my first broker. They had hefty fees too. Now that I remember it. Stock gap $2 the next day, and I made $1,000. I was hooked. Yeah. The next week I lost it all. Yeah, yeah. I get it. Yeah, I remember going into a Scott Trade building one time for that year. And I was talking to this lady. She's like, yeah, stay away from penny stocks. I'm like, stay away from penny stocks? I was like, I did really well this year with penny stocks. She's like, oh, really? And then she looked at my account. She was like, oh, she was like, you did do well with penny stocks. I'm like, yeah. And then it was the following year. I got bodied. I got wrecked. So $15 each way. I think it was more like 7 or 8 for me. But I was only putting in, say like 1,000 or a couple $1,000 into a stock. And so you're already down like 1.5% based on the fees, So if you trade actively, I mean, you're literally losing 1%, another 1%, another 1%. So unless your stocks are doing very well, those fees are going to kick your ass if you have a small account. Futures is not that bad. Like relative to the point system, oh, it's not bad at all. So. All right, here's what I'll leave you with, because I mean it pretty much closed this last candle here. This is what I'm gonna tell you. It is obvious that the market hasn't really done what we anticipated. We didn't want to see the 70s. It ran up to the 80s, okay? Then back down near this gap. It's, again, the indices, they're not really confirming each other. I don't really see the bearishness on the S&P. I don't see bearishness here for the Nasdaq either. So I think the bearish bias might be wrong. Okay. And the fact that today is a day like that, it's the first day of the month. Things are just not as clean today as other days. So you need to study this type of stuff and write these things down. Okay. Because you need to know what type of environment that you're in. Certain environments are really good for pressing buttons. Today, probably not a day like that. Sure, you know, what did you miss? You really didn't miss anything. We were anticipating a lower Dow, like a higher and then lower Dow, but right now it doesn't look like it wants to go lower. We'll still follow up later, like with the screenshot, obviously, because we took it before, but the after it, I don't think it's going to look good today. But you need to recognize the signs, though. If you're in a trade, it immediately almost goes for your stop and then goes back near your entry. Now it's kind of dancing around. You need to be aware of markets like this. They're not confirming each other. It's the first of the month. It's just not a prime day to trade. Okay? There are good times to trade. There are not good times to trade. And you need to know that, because that's actually part of a risk management video. I haven't made it yet, but that's part of it. The conditions that you're in. Are you in high probability conditions, or are you in low probability conditions? You don't go full risk in low probability conditions. Okay? Again, that's part of it. I haven't made the full video yet, but that is part of it. Okay? So, with that being said, y'all be good. I'll put out the market review a little bit later. We didn't get down to our 95 level yet. We did get close, though. So that might be on the table for later or tomorrow. I don't know. But we'll see. All right? Yeah. So y'all be good, man. I'll see you. What's today? Tuesday, right? Yeah, that means we'll be here tomorrow for our next live stream.